The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 7th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to give us a call at 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com. Just inside that subject heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 37 points at 21,769. S&P out 3 points. NASDAQ up 6. Russell up about 3. Semis are Russell's off about 3. The semis are up 3. Very flattish style markets up here. Transport's up 0.25%. Gold is up $10. Silver up 20 cents. Light sweet crude is flat. Leading the charge here to the upside. Restoration Hardware having a great day, up 42%. That's $21. Amazon up about 11. Guidewire Software up 7. Biogen up 8. Cabela's Inc. up 7. To the downside, Regeneron Pharmaceuticals up about $27 or 5% to the downside. Everest Real Estate Group down 6% plus, off $14. Charter Communication down 12. Alnylam Pharmaceuticals, hey, down 11.11. That sounds like a lot of crap to me out there. Race Ferrari down $8.30 out here. So no email requests just yet. So let's go take a look and see what are the general markets doing. What are they communicating to you and I? And it's interesting out here. Because if we take a look at, we haven't looked at this for a while. Let's go take a look at this chart. We look at it certainly periodically. You've got a 4-panel chart out here. And these 4 panels, the very left-hand panel is the New York Stock Exchange. The second panel inside the New York Stock Exchange, so below price, you'll see that is a green line. That is the summation line. Now, it is below zero. You'll see a reading of minus 725. Now, that's the summation of all of, or each of the daily oscillators on the very advanced decline oscillators on the very bottom panel of my screen, which is above zero, and that's why that is green. It's a decent trend-based tool out here, and so therefore, if you're going to take a look at the New York Stock Exchange and ask the question, hey, Steve-O, what's the trend? Well, there's your answer inside of the New York Stock Exchange out here. The trend meaning because it's below zero, at least you have a counter-trend rally. In this case here, that trend would be to the upside. You and I could change that picture, or the New York Stock Exchange could change our reading of that picture if that advanced decline oscillator were to get below zero. It's not. It's at 64.33. So a lot of the sideways agitation is what it is we're seeing inside the markets. If you go to the very next panel out here, you've got the NASDAQ Composite. Trading into its all-time high swing point out here, the low of which is 63.18. You're at 63.95. The high of which is 64.60.84. Its summation index, you'll see the green line. That's to the upside. You'll see that it's above, or the advanced decline Oscillator reading, very bottom panel, reading out at 70 point something, so that is positive. And your swing here still into that, no rejection here. You'd have to at least close below 63.18, 62 to get outside of that swing point, big swing point from that trading day of July 27th out here. So what's its message? Its message is not ready to head to the downside out here. If you look at the Dow is kind of a weak link. Now, you'll see in the Dow, here we go, you'll see that its summation index is red. You will see that its advanced decline oscillator reading is down at a minus 0.15, hence the redness out here. And but we've seen just really kind of like the cone of silence out here, right? I mean, if you take a look at it over the past, let's just do this here. We'll just draw a couple of lines. It's, I don't know what tool, what color it's going to show up, but it doesn't really matter. You know, you've got, here's a little trending line, right? You got lower or higher lows out here. And then you've got this little short-term, you know, here's the cone of silence inside of the Dow. Now, to a certain extent, the cool thing about this pattern is that whichever way price would break from it, assuming that it doesn't, well, even if it broke today, you just simply come back to, in essence, the base, which is really the low from July 21st up to the top of that range. So here's what it would look like. Here's how you would just simply draw it. You don't have to be, whoops, I got to grab the right tool to actually draw it. You don't have to be much of a market technician to see this pattern. So this is one that is easy for each of us. And so to the downside, if there were a break to the downside, you'd be looking at a price range of about 21,112, give or take. To the upside, what you would be looking at if we were to see a break to the upside, and the answer is yes, we can see a break to the upside, 22,629. But maybe that message that you are looking for, that you and I are looking for, will come from the Dow Jones Industrials out there. If we take a look at the S&P 500, it's leaning towards the, we'll have to call it the bearish side, because really the indicator that you and I use to try to call the S&P 500, we say, hey, Steve-O, where's that VIX trading in relationship to the 50-day exponential moving average? That's the bottom panel of our screen out here. And when it's above the 50-day, which it is, the 50-day is 1142, we're trading at 1167, that's where bad stuff can happen. We haven't seen a lot of bad stuff here lately, although we are preparing for some bad stuff here in southern Florida. But as the S&P 500 goes, there hasn't been a whole lot of bad stuff out here. So with regard to the S&P, you know, and maybe with regard to the Dow, one of the other tools that you and I will certainly use are, hey, Steve-O, what are those TAS market profiles doing? So that's an excellent question. Let's go take a look at it. Let's take a look at the ES Mini. Let's look at it on the 4 different time frames. Well, we will as soon as I can find it. Where did I put it? Where did I put it? It's nice to have that handy, but I've got enough tabs out here. Oh, my goodness, where is it? Where did it go? Oh, wow. Here we go. There we go. Now, in this case here, we get to take a look at 5 different profile time frames, 30, 60, 240, daily, and the weekly time frame out here. Daily, message is bullish. 240 minutes, we'll call it neutral. 60 minutes, bullish to neutral. 30 minutes, neutral. Where are those grizzly bears? They're not here in the ES Mini. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. First question that came in, Jeff writes in and asks if I am concerned that the New York Stock Exchange has formed a top, and also, are you in the eye of the storm, the hurricane? Well, let's take a look at the New York Stock Exchange out here. And this is this is the pattern that exists when the market makes major tops. There's a couple of them out there. They're not present at the moment. One of those patterns is, and the bottom panel of my screen out here is the advanced decline oscillator reading. That's the very bottom, which what we know about the New York Stock Exchange. Oh, this is really interesting. Are we at a new all-time high today? Or yet? Let's see. So, no, sorry about that. Let me just explode this up just a bit, just a tad. No, we're not, but geez, we're not that far away either. So here's taking a look at this chart here. I think goes back into the 90s at this stage here. So don't pay attention to the numbers on the right-hand screen. Just pay attention to the blue line out here. And we made a brand new all-time high. That was on September 1st. So today is September 7th. We are not at a new all-time high right now. But the thing is that if you go back and you study this tool, because there are some real nuggets out there, just like when you study the spot volatility index, there's some real nuggets there that we use for our trading, right? But how about that greater than 10% one-day rate of change out there? How good does that work for you? In this case here, we've never seen a bear market begin with the advanced decline line at a new all-time high. There's a lag. The lag really is, and I've said that before, it's not so much that there's the lag. There's really a pattern that forms when those tops form out here. And what happens is price moves to new higher highs, which we have not had. The highest high that we had out here on a closing basis right now, August 1st, 2017. So we had the advanced decline line making a new all-time high, but we've had price make a declining high. That's actually what we call a bullish divergence, not a bearish divergence. It is the flip side, is when the New York Stock Exchange is signaling to you that it is making some type of major top out here. Now, to have markets decline from a new all-time high in the advanced decline line, yeah, of course, but not one of these major type tops out here. So am I concerned about anything inside the New York Stock Exchange? And the answer is No, there is actually nothing to use the New York Stock Exchange and suggest that this is a basis for why the markets are going to crash or form some type of major top out here is just ignoring the patterns that are present when that occurs. Out here, we're just back in 2015, and here the price here was in essence was doing a double test, triple test of the highs out here, and the advanced decline line was making lower highs. That's the type of divergent pattern that can lead to a nice decline. And in fact, that's what really took place in 2015. As you take a look at this chart here, again, the top chart is the way that you would look at price. Let me just do a little scrunching here so we can move this forward. Take a look at other highs. My apologies out here. Man, let me really do the scrunching. There we go. So here we'll just simply, Jeff, take you back into the most recent bear market, we'll call it that. Actually, the most recent one was in May of 2011. But let's just take a look at, but that was in the S&P 500. But here, if you take a look at the New York Stock Exchange, you had price make higher highs between July of 2007. And July of 2007 is when the New York Stock Exchange made its all-time high. Okay, so July of 2007. We know that the high inside the New York Stock Exchange didn't take place until October. So there you had a 3-month lag. And what was occurring at the same time was lower highs inside of the advanced decline line. That, my friends, is what you see at any type of significant top inside of the market if you're going to go ahead and use the New York Stock Exchange. You can throw the new highs, new lows. You can throw the the balloon that's going to bust in the sky theory. What is that? The Hindenburg omen. You can throw that Hindenburg omen out the door. Because none of that stuff really matters. What matters when the market makes those types of highs with regard to the advanced decline line is it making lower highs while price is making higher highs. We do not have that in place. So what that says to both you and I, it says that even if we do get a decline, it shouldn't be anything of significance. If it got to 10%, we might be lucky out there. Of course, lucky depends on which side of the trade you would be on. But as we speak right now, that is not the signal. With regard to am I in the eye of the storm, the question is, where is this storm really headed? It's headed for South Florida. The latest report says I am dead smack in the eye of the storm out here. Here's the state of Florida. So we'll put this on the screen for you. And where I live is right here, this little city called Delray Beach. And so it supposedly is coming in right around Hialeah and just going to cruise straight up I-95. That's what the current track is. And if it does that, well, I could be on the northeastern side of that eye. And if that's the case, I will certainly get out of Dodge because, who wants to actually go ahead and go through that? And if the storm surge is high, I've got to go because my backyard is the intercoastal and the front yard is a par 5 away from the beach, 500 yards, 550 yards, something like that. So, but the problem is, where do we go? Where do you go? Because right now, I've got plans. I've got things packed and ready to roll, but they don't know if this storm is really coming in here, if it's going to skirt the coast, if it's simply going to cruise over. I mean, I looked at there's plenty of hotel rooms at the TFNN headquarters. So they're not thinking that it's going to be Tampa, but it could. It's the whole state is covered, so it's really kind of a crapshoot right now as to which way to really go. So I, Jeff, am playing it by ear. But pretty good chance based on what the storm is doing. I won't be here tomorrow as I further, prep things like, backing up computers, having stuff in safes, putting some other computers, all that stuff that you would need to do with a cataclysmic type storm that is out there. So that's that. Is the market going to do a whole lot between now and then? I don't know. We've just got a lot of this sideways-ish type action. I think the best way to consider trading the markets are that what we know over the past month And that is at we take a look at the equity futures contracts. They have not been able to bust through the lows. That's 24.19, and they've not been able to bust through the highs, and that is 24.79. And that's just taking a look at the weekly TAS market profiles out there. This is the range that we're in. Really been sideways for longer than that. The truth is, we've really been sideways, if you take a look at the upper and lower boundaries out here, since June. We're in September. So, and there are a lot of people calling for the market to crash in June, those sell in May, type folks out there. So the best thing that could happen with regard to the storm inside the markets is just this continued kind of move sideways, because what we also know is that is not how markets make highs. Markets don't let you out when they make their highs. That's not the case that we have right now. Inside the NQ, your range is 57.34, top is 59.95. Wake me up when we bust through either of those, because then we'll have some real action. Until then, it's just a little football game. Go from one end of the zone to the other end of the zone. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Mike writes in, says, hello, Steve. Hello, Mike. I sold XBI on Tuesday for a nice profit, so, hey, congrats to you on that. I'm thinking to get back in on Monday if there's a downdraft. Otherwise, how does it look to you for a re-entry? So ticker symbol is XBI. Let's go to our chart where we can take a look at daily, weekly, and monthly profiles. That is Where the heck did I put that thing? Man, it's right out in front of me. There we go. Okay, so let's go take a look at ticker symbol XBI. First, let's go see what in the heck. Oh, it's the Spider S&P Biotech ETF out here. Okay. Wow. Oh, wow. Look at that wide-ranging bar from last week, Mike. Woo! Woo! That's a doozy. That's a wide-ranging bar. Okay. I think what we'll do is we'll start with the monthly chart out here. So we take a look at the monthly chart, and you're looking at this thing to have a downdraft. Now, it sounds to me because you sold it on Tuesday and you're looking to get back on Monday, you're really short-term trading this thing. But here's one of the things that we know about the Spider S&P Biotech ETF, and that is, one, it's trading into the monthly swing point from July of 2015. Now, there were 81 million shares back at that trading date, and this moved into it last month with 86 million shares. So what XBI is doing in terms of just taking a look at price, volume, and so forth, it's pushing into a swing point with volume. So I think, Mike, you are on the absolute right warpath here in that this will or should go test that swing point high. Could even take it out. It could form an A to B equals CD to the upside. Big explosive move. So don't count that out. So 91.11, though, that has to become your target so that you're doing your risk-reward analysis out there. 91.11. So you should write that down on a pad of paper. There's nothing on the monthly chart to suggest that that is not what it's going to do. If we now come back and we take a look at the weekly chart, well, recently, the weekly chart, we were taking a look at the swing point out here from July of 2015, 18 million shares. And last week, you were moving into a 24 million shares. Yeah. So, Mike, this has all the indications that this wants to move up to that 91.11. Weekly, monthly. If we go take a look at the daily chart out here, just been churning sideways. TAS market profiles are so far underneath this thing that we can't really use those as an entry point. There's a B point from the trading session of July 25th, 6.3 million shares. That was passed with 7.1. So, see, XBI, Mike, actually has a confirmed A to B equals CD to the upside, and that's going to give you a price projection. Let's go see what this gives us, of 89.97. to 94.25. So there's your 91 buckaroonies out there. And so, yeah, you had a nice profit in it. There's actually, I can't find the reason to actually sell. I can't find a good entry point out here. I think you had it. So it gives you the ability to come back. Is it XLI? XL, let me make sure. XBI. I got to pull up the right chart on this right here. 82.17 on a pullback, Stevie's red line, if you were to get that. So that's where it's headed to. Hey, Mike, thanks for listening. Thanks for writing, and thanks for your best wishes as well. Let's go to Maria in New York. Maria, thanks for calling. Thanks for holding. How are you today?
Yeah, hi, Steve. How are you?
Very good. Thanks so much for asking.
So I just wanted first to tell you good luck for this weekend, because all my thoughts will be with people in Florida and everywhere on the path of that monster.
Yes.
And I hope that you're going to be safe and act fast so that you're not on the path.
Yes,
and my second question was for the T-bonds. What do you think about the T-bonds and the behavior today?
So there's two things here with regard to the T-bonds, and they're doing what both this chart here, which is the Japanese yen, and T-bonds are doing the same thing, and that is that they're both trading into resistance. And if in fact we can see the yen break above resistance, and for resistance, what I'm looking at is the high from the trading session of June 14th in the yen. That's the September contract. And that is at 92.28 out there. If price were to close above that, that would then signal to me that bonds are getting ready to break out. And by that, we'll see when I put up the bond chart here, it almost looks similar. It almost looks like we're looking at the exact same chart. Now, it's trying to break above its resistance zone. I would like to see both take place. Now, resistance for the December contract for the T-bond futures out here is priced at 157 and 0.8 out there. So that's, you want to see, in my opinion, you want to see both really close above that. What's the time period trade, though, Maria? I should ask that question first.
I'm looking at the 120 minutes and the daily, basically.
The
I'm trying
120.
to figure out 120 minutes and a daily just to have an idea of what's going on for the next maybe week or so.
Okay. So on the 120-minute time frame out here, what you're about to receive during this next, this would be 2 o'clock, is you're going to get a candle session. That is a Tom DeMark, a TD setup, a number 9 count out there, and oftentimes that can be where price begins to stall. It has more of an opportunity to stall if it trades down into the bottom of this market profile out here. But you're up at resistance. So I'm just taking a look at a 120-minute time frame out here. And if we just take a look at the Japanese candlestick signals, you've got a nice bearish engulfing candle up at about 10 o'clock in the morning on August the 29th. Right now, you've got a little dark cloud cover. So resistance is holding inside of the 120-minute time frame. So are you looking to go long or short?
No, I would like to get short.
So if you're looking to go short, then in essence you have your signal now. The only problem is that what you'd really want, and if you did take it now, I would get it. You need to see it close below. I just want to change to a different chart out here. If you give
I'm not in front of my computer, so if you can tell me what do you see the bottom of the task profile that you were mentioning, that would be great. But I have the levels in mind.
Yeah, so on the 120-minute time frame, Maria, what you're looking for is a close below 156 and a quarter. That would be the level that would confirm. That is your level of support, and it's a good level of support out there. But that's what you would need to see price break, and if it breaks there, then you're.
Makes sense.
Yeah. So but definitely on a 120-minute time frame, it is up against a resistance zone. And just real quickly here on a 30-minute time frame, a 30-minute time frame, it says price should pull back. That's the message out here.
That's wonderful. Thank you so much. Well, try to keep safe, Steve, and good luck for this weekend.
Thank you. You bet. Thank you for calling.
You
Thanks for the nice
Bye-bye.
wishes. That is Maria looking at T-bonds out there. So first, the most important question always is, hey, what's your time frame, right? Because to a certain extent, the intraday time frames are going to give you different signals than the longer-term time frames that are out there. Let me just check the wire here real quick because I want to get to any questions certainly that have come in. And one more thing out here. No other questions. So what do we want to look at next out here? Let's take a look at, if I'm not with you tomorrow and the markets start to trade lower, because I gave you that range that we're in. What do you need to be at the short side if you're going to trade the NQ as an example, or one of its derivatives, in order to go down to the bottom of that market profile? Right now, I'd say in the NQ, you've got to get below 59.38. Steve, you should read fine.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the Tigers and Tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So a bunch of questions coming in. So here, I'll give you my perspective. So I've been in Florida for 35 years, and I've been through a bunch of hurricanes. Somewhere we've had direct hits, somewhere they just simply flushed by. And the media these days, social media, just all of the media out there, does. And with this storm is a serious storm. I mean, there's just no question about it. I mean, it's just deadly serious storm out here. Probably it's potentially the most devastating storm that I will have seen out here. So it does require precaution. And I will say that for many days now, Mr. Z, the alerts have been up, and lots of people have been fleeing. So I'm on an outer barrier type island out here. If there's really a wall, I saw a report. Again, it's a computer model, so you never know how good the data in is. But they were projecting a 50-foot wall of water out there. So a 50-foot wall of water, I'm not going to be around to check that out. Water's pretty, but here's the deal. So a lot of people. So one of the questions was, are a lot of people just staying put in the greater South Florida area, greater Miami area? I can't really speak to Miami, Mr. Z, because I haven't been down there to scope things out. But I can report to you what they're doing in the Palm Beach County area. And last night when I went out for dinner, went to just kind of the normal spot, and which would be fairly lively. It's also on the island side, and it was like a ghost town. And so and even as you drive around, you see that there are a lot of people that have already bugged out. If you look for airlines out of here, it's very hard to find seats. You can actually you can drive up to Tampa, which for me is about a 4-hour drive. You can fly up to Orlando, and you can get out, but in a little bit here and there, Miami and Fort Lauderdale, but really kind of tough to get out airline-wise. I've seen a lot of that gouging. But what the social media has done, so take Matthew as an example. So Matthew went through the same thing, was a pretty big storm, was potentially going to have a direct hit on this area. I just simply waited and waited and waited, had all the preparations. And I just simply was waited to see if we were going to take a direct hit. And if we weren't, then it was just a matter of just simply riding it out. generator or power the house. It's no problem. And, and I've got all the radio gadgets, the whole thing out there so that it can keep track of what the storm is doing. And it's just the bridge is not that far away to get out of Dodge when you actually need to. Now, the cool thing is that if I were to decide to go like late tomorrow night or something like that, a lot of the traffic will have been cleared out. At least that's the way that it has been in the prior hurricanes. It keeps getting better and better. So the longer that you wait, so many people have already found comfort wherever they're going, that the traffic is more difficult right now than it is than it will be tomorrow night, quite frankly, and the same thing on Saturday. Now going east-west is not a big deal. Going north, not going south is not a problem, but going north is where things get a little bit iffy. Before we came on the air, just as I was starting the show, I was watching CNBC, so I've got that in the background. And I was trying to, so as I'm trying to go through my open, I'm also watching the screen because it was the first time I've seen I-75 corridor, which was something to actually consider, such as coming up to the Tampa area. I checked into the Sand Pearl. I mean, they got plenty of rooms up there. So I'm like, all right, well, that would be okay. Just hang out with Tom and Tommy and, and the crew out there. Although, they still might get hit. Maybe not as bad, but you don't know at this stage of the game. So all I'm saying is the thing to do is to take all those precautions, let the media get all of the hype so everybody is out, and then you just simply plan accordingly. And I found that being on the road towards the last minute is a better deal out there. So I'm not going to risk my life, not a chance. The storm just needs to be monitored, and these poor islands, where the eye has just simply blown right over it. Look, all you have to do is to have actually lived through some hurricanes to see the damage that they can inflict. You see it. You see it on TV. It's just simply major out there. So I can tell you that I think everybody's taking great precautions. I put inside the Tiger's Den, one of my backup plans, even if I were to stay local, is to consider just bugging out and heading to a hospital. I'm like, that to me sounds like a logical place to hang out. It might be able to be of help to somebody, but you got parking garages for the most part. And if the worst case happens, you're in the right spot, right? So in any event, enough about that. Not worried about the sake, Randy, but the computer stuff, you start looking around and realize all the stuff that you kind of like is a necessity that you've got to take. In any event, back to the markets out here, and for the other part of the problem is you go too far, getting back to your home is a more difficult thing to do. It's more difficult to get back onto the island. In any event, hey, if we take a look at FANG stocks and see what they're doing, since I accidentally closed out things yesterday, if you were with me on the show, the system was acting very poorly. I went ahead and just simply made a couple of changes out here. So I can take a look at FANG in a heartbeat and take a look at Facebook. So you see it on my screen, up 58 cents. Netflix, Apple's down 65 cents. Let's take a quick peek at Apple, see what we have going on out here. Volume-wise, 16 million shares. This thing is trading. Well, I guess I didn't do anything about these profiles. Give me a second here to take a look at these profiles. Oh, that's at 240. Okay, so we've got the daily. Is there anything really wrong with the Apple chart? No. Great support on this would be 159.19. That would be the bottom of the daily profile with the right volume. That could certainly be a buy point, but nothing wrong as we take a look at Apple on a daily basis. Facebook, if we take a look and see what Facebook is doing out here. Facebook, just like the NASDAQ Composite, which was trading into its swing point high from July 27, so too is Facebook. Now, look, 68 million shares out there. But here's the reality, okay? And this is the very first thing that Tom would teach you. This is the very first thing he'll teach you in Boston out here. And that is that you have a untested high-volume high inside of Facebook. 68 million shares. It is nothing to be afraid of. So the top of that is 175.49. Now, if it tests 175.49, falls back below it, then you've got a failure on price and volume, but you got to figure out, hey, where are support levels out here? But Facebook, just like we took a look at for Mike, we were looking at the XBI, Facebook wants to go test that high. It's as simple as that. There's not a bearish thing about the Facebook chart as we speak about, as we take a look at it right now at this very moment. Netflix trading out 179.45. What is it doing out here? Hey, yesterday it closed the gap. That should have been resistance. That was 177.45 to 179.44. Old resistance should become new support. Where's Netflix headed to, folks? Probably the 190, 150 level. Doesn't sound to me like market fall.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Dow's off 42, S&P is off a point. Let's just finish off the G on that FANG Google and take a look at what it is doing. Trading out right now at about 932.51. And when we take a look at this chart, we see the market profiles out here. Let me do this. Let's give you the scoop on that. You've got a daily and a weekly bottom of the box between the 906.36, that's the weekly, and the daily 912.50. It's really good support. It's a great support area out there. In fact, if Google were to pull back into that range, let's say with less than 1.1 million shares, Yeah, less than 1.1 million shares out there. That would be a buy. And if we take a look at what Google is doing at this stage here, let me turn off those profiles. There we go. And you can just see the downright consolidation. You see, you had a high out here inside of Google on June 6, 1.8 million shares. And that was tested with 3.2 million shares. How about that? Pushing into a swing point with volume. Then there was a gap to the downside with 4.6 million shares. Maybe it was an earnings release. I don't know. July the 25th out here. But really, this is just sideways consolidation action. Now, again, the beauty of any type of sideways consolidation action is it gives you a measured move, equal to or greater than the rectangle that it creates out here. But at this stage, it was pushing highs with volume out here. So if it can get down into that, the 901-ish type area out here, do it with light volume, that would be your buy to send it to the upside. Now, the problem now is that your first target becomes September 1st. Because that's kind of like the junior swing point that would be out here. And your other target really has to become the gap to the downside on July 25th. But there's nothing broken here in Google. There was nothing broken in Apple. There was nothing broken in Facebook. If things are broken anywhere where that was, oh, wow. Hey, I hear that that's the end of the show. Hey, folks, thanks so much for being here. Stay tuned because your friend and mine, your favorite polar bear, David White's up next. Hopefully, I'll be with you tomorrow. If not, have a great Friday, great weekend, and we'll see you on Monday, Tuesday, something along those lines. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.